This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on September 20th, 2013. Our time is 8:44. Radio show runs on your favorite radio stations. Archived as well on Harold's websites, HESradio.com, RareColoredDiamonds.com. We have a podcast through iTunes. Type in World Financial Report on Radio. You will find us. As well, Harold does daily market commentary on his websites, and you can find it on the podcast site as well. A reminder, bank depositors just lost 47.5% of their money in Cyprus. Could a bail-in happen in Canada? Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, invites you to an exclusive free seminar about the shocking truth of the Canadian banking system, Tuesday, October 22nd, 6 p.m. at the Hilton Garden Inn. Register for this eye-opening financial seminar. Call 1-866-623-2002 or sign up online at wwpmc.com. They'll be offering free private information sessions as well. Connect with Worldwide Precious Metals. They're going to be in Toronto. As we tape today's program, there was no Fed tapering. And we were one of the few radio shows to say they would not taper. We were right. Bullard, a member of the Fed, came out this morning and was trying to backtrack on things, saying, well, it was very close, whether we would have done it or not, and next time we may do a little. A great quote from Mike O'Rourke from Jones Trading. Right now, the FOMC has a tiger by its tail. It has lost control of monetary policy. The Fed can't stop buying assets because interest rates will rise and choke the recovery. And you talk about the situation that the United States finds itself in today. You have 23 million people. Households on food stamps now outnumber all households in the Northeast United States. And that obviously does not say there's a recovery. In fact, around 13.6% of U.S. households are now using food stamps. On top of it, you have a serious situation when it comes to, and this is from the census, the typical American family is making less than it did in 1989, about $2,600 less per year. People in poverty up 6.6 million. Amid a slow economic recovery, most Americans identify as lower class, if you can believe it. And you talk about employment, the gap between the rich and poor is the widest on record. And the job gains for females, most of them came from people waiting on tables, women waiting on tables. We have a story about that in our newsletter. Obviously, it's a time where we obviously know from our radio show and all the research and time and effort we put into things that the economy is in very rough shape. That's why we recommend hard assets. In fact, Egon von Greyer saying, my forecast of roughly $2,500 in gold, $70 in silver within 12 months still stands. John Embry, I totally share my business partner Eric Sprott's opinion that the silver price, which as recently as 2.5 years ago was 50, will trade over 100 in a shorter time frame than most people realize. Harold, there was no Fed tapering. We said that would happen on our radio show. Nothing would happen. We've been saying it for quite some time. We were right. We saw gold have a very strong week. We're seeing a pullback today, but over the long term, I do agree. The Fed has a tiger by its tail, and they're in a very tough situation.
I don't know how they're going to get out of it, Randy. You know, the fact is that if they did taper, obviously, you know, cutting back on the $85 billion a month that the Fed is putting back into the mortgage and bond markets, you would see a rise in interest rates would kill the stock market rally. So that's what they were most concerned about. And secondly, the housing recovery, which again, neither one of those two situations are very strong situations that you can really bank on. In actual fact, the real estate markets in the United States are as concerning as they were back in 2007 and 8. When a real estate price can go up by 20% in 1 month, that is not normal. You don't speculate with your home And that's basically what people did back in the 2003, 4, 5, 6, 7 range, and look at where it got them. Most people ended up losing their homes. The fact is that they're forcing the price of real estate up, but the real estate market will crash again, unfortunately, because they're not doing it in the correct way. They want things to get back to the way they were back in 2007, 2008, before the markets crashed. And they're trying to force that on the markets, and there's just no way in the world that you can do that, because the markets will always trend back. The trend is always your friend, and the trend for real estate has got to be lower. And the fact is that there is still a gigantic, and I mean a gigantic amount of homes that the banks are still holding that they have not put on the market. So what they're trying to do is artificially raise the price of the real estate market, but we know from history that you just can't do that, and you don't speculate like that, especially with your primary asset, which is your home. So that's one thing. That's a very concerning situation. Again, this week alone, because of the tapering situation that was going on and everybody waiting to see what the result was going to be, I've never seen more frightening reports that have come out this week about the world economy, especially the United States economy. And the fact is that these guys are not crackpots. These are some of the smartest people in the industry, and they're not gold bugs. They're not sitting back and saying, gold is this and gold is that. They're just commenting on the overall severity of the U.S. economy and the fact that they've created so much debt and they continue to do so. The fear is that if interest rates go up, it would crash the stock market and crash your real estate market. Some people felt that higher interest rates would crash the metals markets also, but that's not necessarily true. When you look at gold and silver, and higher interest rates can be negative for gold and silver, but it's only bearish for metals if you find that the real interest rate is higher than inflation. And the fact is the best example of that is back in 1979 and 80, when we had double-digit inflation during that particular time, and they were raising interest rates. Don't forget, interest rates went all the way up in the United States and in Canada to 22%. And gold was rallying during those particular times. In fact, gold hit its all-time high in 1980 when it hit $850, and that's as inflation was rampant and they were raising interest rates again all the way up to as high as 22%. So there's the best example I can give you. Gold and silver made their lifetime highs in 1980 at a time when interest rates were on the rise, and that's primarily because inflation was higher than the actual real interest rate. And that is going to happen again. There's no doubt that we're going to have massive inflation. That's what the brilliant people in the markets are saying, the people that, we have an awful lot of respect for, that again are economists that understand how interest rates and how inflation really works. The fact is that the numbers that we're getting out of the government are not accurate numbers, so you really have to do an awful lot of digging and homework to find out what the real numbers are. A good person to listen to is John Williams. He's somebody who does tremendous work and really deals with the right numbers. His feeling is that inflation is at 9% right now, and with interest rates sitting at 1 or 2% or almost at zero type of thing, the fact is that a rise in interest rates wouldn't hurt gold and silver in any way, shape, or form. So we did see a strong rally at the beginning part of the week. In fact, when the news came out that they were not going to taper, and the funny thing is, as Randy mentioned at the beginning of the show, that the Federal Reserve, or a member of the Federal Reserve, said it was a very close decision. There was 10 people voting, and it was 9-1. How close was that? I mean, it's ridiculous. And the fact is they didn't taper one single dollar. So it means that they're going to continue to put $85 billion a month into the marketplace. And in all reality, it's not doing any good because the market has not rallied based on the economy getting better. The market has just rallied on the fact of $85 billion going back into the marketplace. So if that did stop, theoretically, and we did see it, that the market would fall substantially. Back a few months ago when they talked about tapering, the stock market dropped 550 points in 2 days, and then all of a sudden Bernanke came back on and said, well, maybe we're not going to taper, because they're petrified of the stock market falling, and it would have a very similar effect on the real estate market. But all in all, the metals did very, very well at the beginning of the week, because when they were waiting for the decision on tapering, gold was down about $10, very lightly traded. Silver was down about 25, 30 cents. The stock market was down. The Dow was down about 50, 60 points. And then the news came out that they weren't going to taper. All of a sudden, you saw one of the biggest reversals in the market you've ever seen. And gold went from $10 down to 50 some odd dollars up. It made a $60 move in a matter of a few minutes and stayed there for most of the day. The silver market did similar. It was down 30, 40 cents, and it finished up $1.50 on the day. So that'll give you an indication as to how important that meeting was short term for the markets. And then the same thing happened. The Dow rallied about 115 points, and that's how the markets finished on the day. The next day, gold finished up about $6 or $7, so not as strong as the $50 day that it had on Monday, but still, a decent follow through. And then the market at this particular point is they're taking profits on typical Friday, which they tend to do. And as we're taping the show, gold's down $25. We're trading at 1340 on the gold market. We're trading at 2233 on the silver market. We're trading at 1445 on the platinum market. We're trading at $729 on palladium. As we're taping the show on Friday, the Dow is down about 20 points at 15,616. The NASDAQ is trading at 3,800 basically. And you've got the TSX down 15 points at 12,911. The TSX is actually held in there fairly strong over the last couple of weeks. The big news is the U.S. dollar. The U.S. dollar, which is trading right now at 80.43, it got all the way down to 80.20. Now, that's a very important situation because the U.S. dollar, there's very heavy support in the U.S. dollar at 80 cents. We hit 80.20, and then the traders got a little nervous, and it bounced off the lows type of thing. But what we will see happen, and there's no doubt, because by not raising interest rates, it will continue to weaken the U.S. dollar. And by weakening the U.S. dollar against other currencies like the euro, which is a doomed currency, and the euro is still worth 30% more than the U.S. dollar. The British pound is worth 40% more than the U.S. dollar. So basically, the U.S. dollar will continue to fall. In actual fact, the U.S. dollar, if it breaks 80 cents, and it's only a matter of time, I mean, we're almost there right now, it could drop back down to the 72.5 cent level that we saw in 2011 when gold hit its all-time high of $1,920 and silver hit 50. We get down to 72.5 cents, we should be back up to those same numbers, $1,900 in gold and at least $50 in silver. And then if that 72.5 cent level is broken, then watch this market free fall into the mid-50 level, which is why we anticipate that the price of gold will be at $3,500 to $5,000. There is a direct correlation between the U.S. dollar and the gold market. There always has been. And in actual fact, the only time that the U.S. dollar and the gold market rallied at the same time was really in 1980 when they were raising interest rates. And again, if a rise in interest rates is negative for gold and silver, why did gold and silver hit its record highs at a time when they were raising interest rates to its highest levels ever of 22%? So again, I'm not all that concerned about a rise in interest rates. In fact, we know it has to happen eventually if they're going to reinflate the economy. And by doing what the Federal Reserve and the U.S. government is doing, they're basically bringing or making money as cheap as possible. And in the term, they're destroying the U.S. dollar. So the fact is that here's something also that happened that is very, very concerning and extremely frightening. The U.S. dollar has always been the reserve currency, especially when it comes to oil. However, China has got a new president, and the first thing that he did, the very first thing, the first day that he was elected, he went to Russia, he closed a deal with Putin to buy Russia's oil. Most people don't know this, but Russia is actually the biggest producer of oil in the world. The problem is that they couldn't get a lot of their oil out of the ground because the fact is that a lot of their equipment was deteriorating and has now obviously been replaced, and Russia and China are now in bed together. And the bottom line is that when they're trading oil together, and again, Russia is the biggest oil producer in the world, they're not going to trade it in U.S. dollars. It's either going to be in the RMB or in the yuan, and that's pretty frightening to think that this is taking place. You know, when the United States, talk about kicking a man when he's down, you know, the United States is down at this point here. They're trying their best to put on a good face and say that the economy is recovering and all that, but the numbers don't lie. And the fact is that the U.S. economy is going into the doldrums. And it has been for quite a long time. Some brilliant people feel that the U.S. is still in a recession at this point, and some people feel that the next stage we're going to get into a serious recession again. So when you look at the numbers that Randy spoke about at the beginning of the show, the fact is that Obamacare is going to destroy the workforce, because the fact is that most corporations that are not doing well at this point cannot afford to pay those increases in the insurance rates. And basically what they're doing is they're firing non-important personnel, and they're basically only hiring part-time. Instead of 40 and 50-hour work weeks, they're having 15 and 20-hour work weeks, so they don't have to pay them the benefits of insurance and that type of thing. Well, where in the world, how can the economy thrive when that is happening? Because most people will not be able to survive anymore. They won't be able to pay their mortgages or pay for their car payments or anything at this point. So with the amount of people on food stamps, with the amount of people that have just moved into the poverty range in the United States, it's a frightening situation. There's no way that the U.S. economy is getting any better at this particular point. You've got some situations going on at this point that could erupt at any time. That's why you want to make certain that you have your positions and you're positioned in the market properly prior to these things happen. We could wake up Monday morning and find out that all hell is broken loose in the United States and the banking system is falling out, just like it did in 2008. In actual fact, nothing has really changed. The leverage that was being accomplished and used in the banking system and the brokerage business is right back to where it was again, 40-1. You know, it's all well and good when the markets are moving your way. Leverage can do and make you an awful lot of money. But we also know that leverage can work against you. And when the market starts to fall and you're heavily leveraged, you could lose everything. And that's the situation that a lot of people are in right now. They believe that because there was no tapering, that quantitative easing is going to continue to go on, and it's great for the economy. It isn't great for the economy. It's going to kill the economy, and it's only a matter of time until that happens. So, again, you cannot believe what you hear all the time from from Wall Street. These are the greediest, most selfish organizations on earth, and they're the ones that are making all of the money at this point here because they're able to manipulate markets. The other thing that's happening is that because the governments, especially in the United States, are in so much trouble at this point here that they're just doing anything that they can and anything that they want to try to right the ship. And again, you can't sue City Hall. So the fact is that the government is doing whatever they need to do in order for them to survive. And what's coming up very soon is the fact that there is no budget and the government could close down. Now, it almost happened last year and the year before, because as long as President Obama has been in office, there has never been a budget. So you've got all these scenarios going on at one time. There's no money coming in. You know, the government works off of taxes. And with less people working, and the people that are working are not making as much as they used to, so they're not paying as much taxes. There's no income coming in, and you've got all this debt. We understand that. It's just, you know, the same as a normal household on steroids. If the husband and the wife both lost their work and mortgage payments are done and car payments are owed and everything is coming up and you've got no money to pay, the fact is that you go bankrupt or you borrow money or you do what you have to do. All the government has to do is print money. But eventually, that's going to come back to bite them. So, believe me, the economy in the United States is terrible, and it's getting worse and worse. And the fact that they didn't taper is a horrible thing. They should have tapered. They've got to get off this drug that they're on, of this free money, because it's eventually going to destroy the financial system. And that's basically what's going on. You've got to be in hard assets. If you have everything sitting in paper, we're going to wake up in the very near future and find out that we're back in 2008 again, and all hell is breaking loose in the marketplace. And by that time, you cannot react fast enough. You react out of emotion, not out of logic. So the smart thing to do is to be diversified at this point. Make sure that you have some physical gold and silver. There's no doubt that in the near future, those markets are going to be substantially higher than where they are right now. On top of that, you've got oil prices going higher. You've got the diamond market on fire at this point because people want assets that they can hold in their hands. So, again, get something into the hard asset market. Some of the most brilliant people in the world right now are saying the exact same thing. do yourself a very strong favor. Take a lot of the stress out of your life and diversify your portfolio, and you're going to find that you're going to sleep a lot better at night, and we're going to be able to stave off some of these horrific situations that are on their way and are definitely going to come. So again, gold, silver, diamonds, those type of scenarios are extremely important at this particular time, and I would definitely lighten up on your paper assets. There's no doubt that we're going to have issues going into next year.
Worldwide Precious Metals of Vancouver, a leading Canadian precious metals bullion dealer, is recommended by Harold and for well over 10 years now. They're the experts to trust and work with in this very specialized market. Their website, wwpmc.com, telephone number 1-866-623-2002. 1-866-623-2002, website wwpmc.com. Start your own precious metals investment account today. All gold is allocated, either wholesale or premium. And Worldwide Precious Metals is there to help you maximize profit, minimize risk. You will have instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium storage in specific coin and bar form. And remember, the metal is stored outside the banking system. The metal can also be delivered to your door. Worldwide Precious Metals has worldwide access to the physical hard asset, gold, silver, platinum, palladium you need in your portfolio today. And remember, they are going to be in Toronto. Bank depositors lost 47.5% of their money in Cyprus due to a bail-in. Could a bail-in happen in Canada? They invite you to an exclusive free seminar put on by an accountant who has really done amazing work, and the shocking truth of the Canadian banking system will be revealed Tuesday, October 22nd, 6 p.m. at the Hilton Garden Inn in Toronto. You can register for this eye-opening financial seminar on their website or by calling them. They'll also be doing free information sessions well in Toronto. 1-866-623-2002 or wwpmc.com. Don't forget, you can get our free weekly newsletter from Worldwide. Connect with them, and we'll be happy to send out the info that we have this week. Two of the top stories. J.P. Morgan whistleblowers confess the bank manipulates gold and silver. In a blockbuster King World News interview, London metals trader Andrew Maguire told King World News that two J.P. Morgan employees came directly to him with hard evidence the bank has actively manipulated the gold and silver markets. We'll have to wait and see where that takes the market in the future. Hopefully it is a positive. Also, Goldman Sachs in the past had been saying, get out of gold. Well, the problem is, secretly, they were buying a record amount of the GLD, which is the gold ETF, in the quarter. They were saying, get out of gold. You have to be careful when it comes to Wall Street recommendations. Connect with Worldwide Precious Metals. If you're in Toronto, obviously go to the seminar, meet with them privately. 1-866-623-2002, their telephone number, website, wwpmc.com. Going to come back and talk about diamonds. Harold's going to be back on Bloomberg. We'll tell you the date as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show September 20th, 2013. Our time is 9:09. Radio show runs on your favorite radio stations, also archived online. Harold's websites, HESradio.com, rarecoloreddiamonds.com, and we have a podcast through iTunes. Go to iTunes, type in World Financial Report on Radio. The show is portable. We go anywhere you want to go. And on top of it, Harold does daily market commentary on his websites. You can find it on the podcast iTunes site as well. Harold's websites for diamonds, we'll talk about it shortly, rarecoloreddiamonds.com. Connect with Harold personally and privately at 1-800-432-1022. hsfineauctions.com. Next auction, October 21st, 8 Eastern, 6 Mountain. Harold will be on Bloomberg on Friday, the 18th of October, prior to the sale. We'll talk about that momentarily. Harold recommends only one company when it comes to investing in precious metals. That is Worldwide Precious Metals. The website, wwpmc.com, telephone number 1-866-623-2002. They're putting on an exclusive free seminar in Toronto while they're there, October 22nd, 6 p.m. at the Hilton Garden Inn. If you'd like to go, sign up online on their website, wwpmc.com, or call 1-866-623-2002. They're also doing free private information sessions. And if you'd like to learn more, connect with Worldwide Precious Metals. In the news this week, our featured diamond of the week from rarecolorediamonds.com. You can see it online. You can see the video online. We have a link to it in our newsletter, a picture of it as well. It is a .31 carat radiant cut, fancy intense, purplish pink argyle. And it's a beauty. It is absolutely stunning. Also in our newsletter, we have from Harold's last appearance on Bloomberg, we have the interview between Harold and Deirdre Bolton. So you can take a look at that as a precursor to seeing Harold again on October the 18th, a Friday, when he'll be on Bloomberg again. One of the top stories in the diamond world this week, all that glitters. Diamonds outshine gold for Chinese brides. China's diamond market, now the world's second largest after the United States, has more than tripled to $22.8 billion over the last 5 years, according to data from market research firm Euromonitor, steadily gobbling up market share from gold and far outstripping the growth rate in China's 460 billion won, that's 76 billion jewelry sector. In China, we now have more and more young ladies making their declarations and proposal ceremonies within our bridal rooms, says Stephanie Lefay, Tiffany's head of Asia Pacific and Japan, who says couples who are attracted to romantic images, obviously, of diamonds and things like that, they like that little blue box from Tiffany. At the center of the trend, China's 13 million brides each year who are increasingly demanding diamonds. And we see it in the auctions overseas, Harold, in Asia, in India, and China. The auctions are off the charts when it comes to the prices that people are paying for rare-colored diamonds. And obviously, as a side note on white diamonds, we're seeing that happening in India and China as well. They never used to have engagement rings. Now diamonds are becoming more mainstream. Very few diamond mines around. We have a depleted resource and more people wanting it. And we had that story last week where rough diamonds were going to really skyrocket in the years ahead. Obviously, when you add to the fact that a colored diamond is rare already, it will even become rarer as a result of supply and demand as the years go on.
You're 100% right, Randy. It's an unbelievable market, especially at this particular time. The prices of diamonds are skyrocketing, which is a great thing because, again, we're in the investment diamond business, and the future just looks fantastic. You know, the thing is that not all diamonds are investment quality, but certain ones are. And they have a track record, and they do very well at any time. It's just that when the economy gets worse than it normally is, like what we're going through now, then people tend to go to a safe asset like a diamond. Now, you don't put all of your money into any one asset or any one investment. However, to diversify is a very smart thing. When you look at the rare colored diamond market, as Randy just brought up, the fact is that only one diamond out of every 100,000 diamonds that are mined turns out to be colored. If that diamond happens to be a red diamond from either South Africa or from Australia, that diamond's worth $3 to $4 million a carat. $3 to $4 million a carat for a diamond the size of your baby fingernail. If that diamond happens to be blue and vivid in color, it could be worth $2 million. In fact, white diamonds and blue diamonds come out of the same mine. In fact, all that is needed to turn a diamond blue is the mineral boron. So there was a particular mine in South Africa called the Cullinan mine. And out of this mine came some very, very famous blue diamonds because there was the presence of the mineral boron. So out of this mine would come magnificent white diamonds, but the very odd time would come a blue diamond. They're both compressed carbon. They're both exactly the same, made of exactly the same carbon, come out of the Earth's surface from miles below the Earth's surface in volcanic eruptions and comes to the surface of the Earth, and they're a rough diamond, then they're mined and sold to cutters who cut and polish these diamonds. So the fact is that there's really no difference between a white diamond and a blue diamond coming out of the same mine, except that white diamond turned blue because there was boron in the ground. The white diamond could be worth $10,000 a carat. The blue diamond could be worth $2 million a carat. That is the best analogy of why these diamonds are so rare and why they command such unbelievable prices. And with the fact that this mine in South Africa had shut down in 2005 because it wasn't producing anymore, blue diamonds went, in 2005 you could have bought a vivid blue diamond for $200,000 a carat. Now if you could ever get one, they're $2 to $3 million a carat. And that happened between 2005 and 2013, which again is a very short period of time. So this is what's happening in the diamond market. You want to get an asset that is portable and private, that doesn't lose its value. You know, there's so many road landmines in the markets today. There's the stock markets that could drop in October and then again at the beginning of the year. There's also these derivative markets that could destroy the markets like we saw back in 2008. There's so many scenarios that are happening in the marketplaces today that could take away your money. But the thing is that at times it isn't always about making money. It's about preserving your capital, keeping your money, so you're there to fight another day when things get a little bit, more conducive to making money like it used to be back in the 90s. Those days are not here anymore. You can't make money easily in real estate, and you can't make money easily in the stock market anymore, and those were areas that people always felt comfortable. But you look at a diamond that never declines in value, so it preserves your equity. Here you've got one asset that you're not going to lose your money on. But the bonus of it is that these diamonds are in such short supply, there's so few of them available that the prices go up substantially. Look at yellow flawless diamonds. You could buy a yellow flawless diamond for about $20,000. But back in 1980, that same diamond was $500. So between 1980 and now, you've seen an asset go from $500 to $20,000 a carat. And they continue to go up by about 15% a year. So if you're not making 15% a year on your money, if you've got your money sitting in the bank making 1 or 2 or 3%, and we also know that the banks are in trouble, and you could lose all your money putting it in the bank like the people did in Cyprus, you don't want to put yourself in that type of risky situation. So to own a yellow flawless diamond, which is affordable for a lot of people, to put away for 10 years, a $20,000 diamond could be worth $80,000 in 10 years from now. And I don't know of any other asset that will do that with the safety that you have in the yellow diamond market. Now, we recommend the canary yellows, which are the fancy light yellows, but they have to be internally flawless. And then the fancy yellows, internally flawless. The fancy intense, and the best of all are the fancy vivids. There's very, very few of these diamonds available, maybe about 100 to 120 of them in a year. And again, that's for the entire planet. So I would very strongly recommend to put a yellow flawless diamond in your portfolio, either for yourself, for your kids, or for your grandkids for their future, because I can assure you, if you put $20,000 into a yellow flawless diamond and $20,000 into a stock account, in 10 years, your yellow flawless will be worth about $80,000, but what will your stock position be worth? So, again, these are very safe investments. I've given them to my children growing up, and I give them to my grandchildren for their future. The other diamonds you want to really seriously consider, possibly one of the biggest profit potentials in any market, is the pink Argyle diamonds. The Argyle mine in Western Australia was discovered in 1986, largest producing diamond mine in the world, producing 30 million carats of diamonds a year. 30 million carats, which are mostly low-grade industrial white diamonds. But this mine is famous for the 200 carats a year of these pink diamonds that are just breathtaking. They're the most concentrated form of wealth in the world. They also go up by about 15 or 20% a year. However, the news came out the last couple of years that the Argyle mine that is owned by Rio Tinto is about to close its doors. It's not producing, it's not profitable. They're trying to keep it open as long as possible, but it appears that the mine is going to close by around 2018, which is only 4 or 5 years from now. So the fact is that when 95% of the world's pink diamonds are now gone, the prices will increase tremendously. We anticipate they'll increase, depending on the color, anywhere from 5 to 10 times what the prices are today. And there's some pretty amazing Argyle pink diamonds. But 95% of them are small diamonds. They're under a quarter carat, but they're considered the most concentrated form of wealth in the world. They're extremely valuable, never ever fall in price, and in my opinion, a home run. A $50,000 Argyle pink today could be worth $500,000 in the next 10 years. And again, I don't know of any other investment that will give you that type of return with the safety that you have in the rare color diamond market. And then the other diamond that we recommend are not colored diamonds, they're colorless diamonds. They're known as deflawless perfect diamonds. See, most white diamonds are not perfect. Most white diamonds are HIJK in color, which are still very nice, and they're not flawless. They're SI1s, they're VS1s, they're VS2s, maybe VVS1s. But the diamonds you want to own are the D color, because D is colorless. It's the best color you can get. The clarity grade is flawless or internally flawless. Again, the best that you can possibly get. But then there's the cut, the symmetry, and the polish. And the ones that we have are all excellent in all three of those categories. So we're talking about diamonds that are perfect in every way. They represent 0.001% of the market. They go up by at least 15% a year, never decline, and they're negative correlated to the stock market. So if the Dow drops 50%, these diamonds can go up 50%. That's what they did in 2008 when the markets fell by 50%. So again, these assets are tremendous assets. But let's face it, the one negative stigma that the diamond market has is, how do I resell these diamonds? You know, if you're not buying a multi-million-dollar diamond to sell through Christie's and Sotheby's, how in the world do you ever sell your diamond to realize a profit? Most people will realize that when you buy a diamond through a jeweler and you're paying, you know, sometimes 200, 300, 400% more than what you should be paying because they're retailers. Not that there's anything wrong with retailers. Let's face it. They put their money up. They have a store. They have employees. They pay their insurance and their everything, and it's a business, and they deserve to make that money. But my business deals with strictly investors. So basically, with my business, a diamond comes out of the mine as a rough diamond. It's sold to a cutter, which we're cutters. We cut and polish our own diamonds, and then we send it to New York to the Gemological Institute of America, where they get graded. You never buy a diamond that isn't graded by GIA, the Gemological Institute of America, and then we sell these diamonds to our clients. With other firms, the diamond comes out of the mine as a rough diamond. It's sold to a cutter. The cutter gets the diamond back from GIA. He gives it to his salespeople. They sell to dealers. Dealers sell to retailers, and retailers sell to you. So you can tell by the time you get the diamond, it's been stepped on many times, and the price is substantially higher than what we would like you to see to buy the diamond at. Then, when it comes time to sell it, if you went back to that same jeweler 5 years later and say, listen, I bought this beautiful ring from you, but I need the money and I want to sell it, you're going to get back maybe half of what you paid for that diamond. So in that case, is a diamond a good investment? No, you lost money on it, but you're going about it the wrong way. You don't go back to the jeweler and sell him something that you bought 5 years ago. What we did is we built the secondary market to resell all types of diamonds, whether it's a $20,000 yellow flawless or it's a $20 million vivid blue. We have H. Siegel Fine Auctions, the only company of its kind, and we built it for our clients to be able to resell their diamonds when the time is right to do so. We hold auctions all over the world. Our last auction, we had 20 diamonds up for sale. 17 of them were Argyle pinks, 2 of them were Cartier signed diamond rings, and one was pure orange diamond, and every single diamond sold on our auction within 1 hour. That's a record. Nobody has ever sold 20 diamonds in 1 hour at auction before. This is the first time that's ever happened, and it's my company that accomplished that. So I'm extremely proud, not only that I built this for our clients to resell their diamonds down the road when it's time to do so, but that it's the only company of its kind. It's not like an eBay site where you go in and you look at what's available and you type in a bid, and then you go back a couple days later and type in a bid. This is a live auction on the internet, real time, works beautifully, very exciting, people all over the world bidding. One auction we had one buyer from London that bought every diamond we put up, 800,000 worth of diamonds he bought in one day, because the British pound was worth 40% more than the US and Canadian dollar. So this is what we bring to the table, the best quality diamonds you could possibly get. We bring you the secondary market to resell them. And again, it's extremely important for us that you resell your diamonds, because that's how we make our money. We get 10% of the profit when our clients sell. So if we don't do a good job for our clients, we don't do a good job for ourselves, and we've just wasted everybody's time. But I can assure you, for all the time that I've been in the investment business, 35 years, and what I've seen in the last 10 years in diamonds, you need to have some money in the diamond market. Now again, not all diamonds are investment quality. Go on my website, rarecoloreddiamonds.com, and take a look at our magnificent selection of diamonds. Go to rarecoloreddiamonds.com, look at the loose diamond section, and you will find yellows, pinks, blues, reds, orange, green, D-flawlesses, the most amazing diamonds in the world. I have over $500 million worth of diamonds in inventory. Most of them are not on the website. We don't put the really expensive $20 and $30 million diamonds up there, but they are available and we do have them. I also have Elizabeth Taylor's last 8 pieces from her collection that have never been auctioned before, including a diamond necklace that's all yellow and white diamonds in a floral arrangement, and I've got the original piece of paper that Elizabeth Taylor sat down herself, designed this piece, put down her personal notes and signed it, and according to a friend of mine at Sotheby's, he said that the paperwork alone, known as the provenance, is worth $250,000. Now, on this Elizabeth Taylor piece, if you do want to see it, I will show it to you in private, email it to you for those that are in a financial position to own it, but I can assure you it's not an inexpensive piece. However, the provenance, the piece of paper, is included in the sale price of the necklace and earrings, and whoever buys that will make a fortune. In fact, in 2011, a pair of Elizabeth Taylor's earrings came up for sale. Christie's was doing the auction. They estimated the value at $60,000 to $80,000. The final hammer price was $862,000. Then a matching necklace came up, and it was the same $50,000 to $60,000 estimate. It sold for over $700,000. This is what's happening in the diamond and the rare gem market. We also have the collection of Cartier, which I've sold most of Cartier's collection circa 1930. That was a $60 million collection. Now we have the Van Cleef Arpels collection and the Boucheron collection, worth well over $100 million. So again, we can handle any business that you have for us. We have diamonds starting at $15,000 that are flawless yellows that have a phenomenal track record, and we also have diamonds in the $20, $30, $40 million range. Most of our clients invest in diamonds under $100,000. Most of our clients are hardworking, everyday people that just want a better return than 1 or 2% in the bank and want some safety. Look at our website, rarecoloreddiamonds.com. Look at it. We've got a learning center. We've got all the information you need on diamonds. Soon we're going to take our investing section, it's almost finished, and turn it into a full learning center for you. It's going to be phenomenal. And then on top of that, we have H. Siegel Fine Auctions, which is the only company of its kind, and we're the only firm that can resell your diamonds for you. Nobody else can do that. I've been in the business a long time, and believe me, it's not the easiest thing in the world if you're not connected to sell these diamonds, and we have clients all over the world. So again, Randy, at this particular point, I couldn't think of a better asset to own at a time when the banks are in trouble, stock markets look like they're going south, and again, the whole financial system around the world is going crazy. A diamond is one of the only solid investments that you could possibly make that will preserve your equity and make you money going forward.
RareColoredDiamonds.com is the website. They have a featured diamond of the week. You can see it on the website. You can see it in our newsletter. Get our free weekly newsletter from Harold. He'll be happy to send it out to you via email every week, free of charge. The diamond this week is a .31 carat radiant cut, fancy intense purplish pink argyle. You can see the picture of it in the newsletter. the video online. It is absolutely stunning. And we have some big auctions coming up here in the weeks and months ahead. We talked about that D-Flawless 118 karat white diamond, the size of an egg. It's going to be coming up for sale in October. Also, there's a big blue diamond they think will fetch $19 million. So we're going to have some auction results for you here in the next few weeks and months that are going to give you a very good indication of how strong and where this diamond market is going. So do not wait. Don't hesitate. Speak with Harold Siegel today. RareColoredDiamonds.com is the website. Telephone number to speak with him personally and privately, 1-800-432-1022. Now, his website, hsfineauctions.com. Next auction, October 21st, 8 Eastern, 6 Mountain, and he will be on Bloomberg. And this is something that you do not need to have the Bloomberg TV channel to get. You can also go online, go to Bloomberg.com, and you can watch for free Bloomberg. You can watch it on your iPad, your iPod, your iPhone, any other portable device, any of the Android devices you can watch Bloomberg on, and you'll get a chance to see our Harold Siegel once again on Bloomberg. And we have that original video when he was on about, I guess it was about 2 months ago. You can find that in our newsletter. But now is the time to speak with Harold. There is a sense of urgency because diamonds get repriced, Harold, when we have auctions. And when records are broken, prices go up. And that means, obviously, prices go up for those that want to invest. So do not wait.
100%, Randy. You're 100% right. And the prices are never going down. They're going up, up, up. So the fact is that, you really have to know what you're looking for. And again, deal with the type of company that you feel comfortable going forward with. So again, we're very excited about what's happening in the diamond market. It's a very, very dangerous time at this point to be in the in the paper markets. We could wake up one day and find out exactly what happened in 2008 is happening again. In fact, I'm betting that is going to happen. We still have the derivatives market. We have the very high leverage in the stock markets and in the banking system. We still got major problems in the real estate market, and now you've got the workforce switching from full-time to part-time because of Obamacare and other costs. There's just no way in the world that we're not going to see higher prices in gold, silver, and diamonds. And again, that's what we've been recommending for 13 years now and have done extremely well for our clients.
5 compelling reasons to invest in diamonds: privacy, portability, estate planning, price stability, and long-term growth. And I should mention, in regard to the auction, you can sign up for the auction right now. And remember, we mention this on every show. We invite everyone to take part in it, but you can just sit back and watch until you get comfortable. You do not have to bid. Just sit back as if you were going to a Christie's or Sotheby's auction, except you're doing it then in the comfort of your own home, on your computer. Sit in a comfortable chair, sit back and see how it works. When you feel comfortable, obviously at that point, you can make a move. hsfineauctions.com. Harold, when will we have the catalog up for the next auction?
You'll have it up on Monday.
Okay, good.
So it'll be all up on Monday. Everything is being filmed and videoed at this point, and it's all in the system. So the whole catalog will be up on Monday, and there's going to be sensational pieces, including some Cartier pieces up there also. So it's going to be a tremendous auction, and all the clients out there understand that one of the big benefits of us being on Bloomberg is that we get such tremendous exposure that we bring on so many high net worth individuals, because let's face it, people that watch Bloomberg have money. So 4 to 5 million people a day watch that show at least, and then it's worldwide. So from our last interview on Bloomberg, we picked up about 2,000 new potential clients that signed up at H. Siegel Fine Auctions. And because the interview is on the 18th of October and the next auction is on the 21st, we anticipate picking up 3,000, 4,000, 5,000 new clients from this interview. So it'll be sensational for the business going forward, because again, the more people bidding, the higher the prices go. So we've never been more excited than we are right now about the diamond industry. And again, being the leaders in that particular investment business, again, we've got some tremendous opportunities for our clients. And again, it's safe money. You're not going to see the price of these diamonds decline because there's so few of them. It's just an amazing investment at the right time.
Harold, thank you for your knowledge and another great show.
Thank you very much, Randy. I wish everybody a wonderful weekend and a very profitable day.
hsfineauctions.com. Next auction, October 21st, 8 Eastern, 6 Mountain. And Harold will be on Bloomberg on the 18th of October. Rare Colored Diamonds is the website, rarecoloreddiamonds.com. 1-800-432-1022 to speak personally and privately with Harold. And Harold only recommends one company when it comes to investing in precious metals, Worldwide Precious Metals. WWPMC.com. Their telephone number, 1-866-623-2002. If you're in Toronto, sign up for their Canadian Banking System Seminar, The Truth, the Shocking Truth Behind It, October 22nd at the Hilton Garden Inn. And they have free information sessions as well. Connect with them via telephone or their website. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.